Stop wondering why and how smart money traders master the market and trade with confidence, even to the extent of going in full margin. In today's video, I'm going to be showing you how smart money traders analyze their market from the bigger time frame to the final time frame, which is the 1 minute, to get their entries. Okay, I know this is crazy, but smart money traders actually reached a point of using the stop loss of what, 3 to 9 pips. But before we get started, don't forget to smash that like button. Let's get started now. We are going to draw our example from GBP/USD. GBP/USD previously had a very good market entry from the smart money concept traders. Now we can see that this was a very nice break of market structure. A very nice break of market structure to the upside. Market has a break of market structure to the upside. And then previously we kind of had to get a market shift. So we had faced no confusion right here. This became a very easy move to capture. Okay, this became a very good break of market structure to the downside. Okay, someone may ask me that, why didn't you wait for trades right here? Now it's fine if you want to see what happens on that level. If we check on this level, we can see that this was a very good gap, very good point of interest that swept liquidity down here and still had a fair value gap. Now, if we are to check clearly, this is a very nice fair value gap. As you can see, it's too evident. Okay, this is a very nice fair value gap. So I tend to mark it as a point of interest, because here this price never reached a fair value gap, stayed up here, and then kept on building much more liquidity to be swept in the coming time. You can see here the trend line liquidity sitting over there. Now once price tapped in this level, it's best we analyze what happened rather than teaching examples that we don't see clearly. Let's see if price actually turns to that point. Okay, I think we can see it clearly. Now we see that when price came approaching that level, we kept on marking our breaks of market structure. For example, this was a very main break of market structure that we had. And what we expected was price to come and break this high, because this is the strongest high, as we can see. This was the strongest high left. So we waited for price to break this high. Then it gave us a confirmation. Then we enter to the buying positions. But then price never did that. It continued breaking structures to the downside. Then it continued. That's why we never took that trade that would lead to a stop loss. Okay. Now let's continue with our analysis. Now as price continued, this was a very nice break of market structure. So all we had to do was to mark the points that were left on this level from this high until this low. So we had to start marking our points of interest and first clear this out, as well as this. So we saw that here was a very good point of interest where price could have possibly reversed from. We had to mark it. We marked all these points of interest and waited for price to retrace from them. Now when price came on, we had to wait and see if we could get very good confirmations on this level right here. Remember, we trade a nice confirmation, and this is what SMC traders do. They wait for the price to come, breaking structures to the upside. It shifts, taps on another point of interest that is always in the lower time frame, then it shoots to the downside or even to the upside. Now let's observe this area in the intermediate time frame, which is the minute 15. Yeah, you see, I use the minute 15 for the entries, but not the clear entry, but it's also a confirmation pattern. It's also a confirmation, or it gives us a very good confluence for us to enter a trade. We first need to get a confirmation from the 15 minute. And this is what price did when it approached that level. I think we should clear this. Okay. Now we can see it clearly that price came on in, breaking market structures to the upside. This is a varied break of market structure to the upside. Now, according to us, this is how the market was actually playing. We had a nice break of market structure to the upside, but having that break of market structure to the upside, price left a strong low, which is right here. Price left a very nice strong low, and all we needed was price to break structure to the downside, because you see it was coming like this, like that. Then all this is liquidity being formed, and that we cannot consider it as a break of market structure. Those are very small breaks of market structure, which are very many break of market structures. So we wait for price to break this low. It comes to these points, one of these points, for example, this one, or even this one, because we say this is a very good institutional funding candle. This is another institutional funding candle. We have a small order block over there. And then we sell off. I think that's what we were waiting for. So we could consider that to be our main point. So we see that price actually started selling off. As long as you are using the smart money concepts, you have to be patient. You mark your points of interest where you expect price to tap, and then you can perfectly sell off. Now this is what market did. Guys, this is very crazy. This is what the market did. It came and tapped on that level very smoothly, and price started going to the downside very, very smoothly, because that level had a very nice gap. You can see it clearly. It had a nice gap right here. Yeah, we can see all these are gaps. Very evident. So all we had to do was to wait for price to retrace our area. Then we sell. Margin selling here. Putting your stop loss above those levels. You actually put your stop loss right here. And then we sell off. Imagine the risk to reward. Because price rewards the patient traders only. If you are trading the smart money concepts, you know what patience means. You should be able to hold your trades for as long as the target is very present. Okay. Imagine the target. Let's run for H for the targets. Now this would have been our target. We don't normally exceed this line right over here. Yeah, that is where we normally target. That is how the take profit was hit. And that is how smart money traders actually take their profits. And that is another varied break of market structure. That is another varied break of markets. As a smart money trader, you have to make sure that you mark all these points. Now, once you have got this break of market structure, let's mark it as a break of market structure. Now, what we have to do is to wait for price to retrace on this level. Actually, there are so many points of interest that this price left here. We have this as a very good point of interest, which we shall wait and observe clearly. If there is a retracement happening, then we can enter our trades and target these lows right here. Maybe we can use, we shall be using the point where price shall have stopped. You see price is moving from this, so anywhere where price will stop, that will be our next target. If it taps here and sells, that's fine. If it continues, we shall sell off from there, but we still have a target to achieve, of course. Now, if price continues to this level, that shall be our target. But as per now, price is right here, and this is our target. If price continues, starts pulling back to these tops, we shall start calculating our profits, being ready in position in the market. Then we shall be able to scoop out very nice trades. Now, that was our trade for today. Guys, always make sure that you are patient, and don't forget to subscribe to this channel, because we always break down very good market structures. We actually give you forecasts for the next week's trades, and actually we do reviews in the weekend. So guys, don't forget to subscribe and smash that like button, because every weekend we leave a nice trade for the coming week. Thank you for watching.